How's it going, everyone? Welcome back to AZ Trading. I've got a quick but very interesting video to show you guys today. This will be another time-lapse style video where I'll be speaking about my thoughts before a trade as well as during a trade, so you can get an idea of how I interpret price live. Just as a little sneak peek, I'll show you the before pictures of the trade, and this is what happened at the end of the trade. This is at the end of the time lapse. And you can see throughout the trade, I've written just a few notes just to capture my thoughts. Alright, so it's 9:15, and at this point we were doing a sentiment analysis, so we can see that price was obviously in a downtrend. It was bearish, so buy side liquidity or liquidity above the market is untouched. So with just that in mind, I was looking for bullish RMRs to target buy side liquidity. And we know the pattern that we use to trade is the RMR pattern, and here I'm just drawing the first step of the RMR pattern, which is the raid. So price has raided sell side liquidity, as you can see on the swing low on the left, as well as reaching into a gap as well. And you can see the same thing happening here on the Nasdaq chart. Price has raided a swing low, and we've also reached into a 5-minute gap. And right now I'm marking out those short-term equal highs, so buy-side liquidity is being generated above the market, so there's a high likelihood of price to be more bullish. The second part of the RMR is the market structure shift. So we've outlined there's a short-term bullish market structure shift, and then price has retraced into a return area, which is that 1-minute gap. So I'm just outlining that this could have been your potential entry, and there was also an entry before that one. There was another 1-minute gap just before that. However, since price is currently accumulating, oftentimes there will be multiple retracements for you to enter. So if you didn't get in on these first two retracements, which is currently what I'm thinking, then when price retraces into a further 1-minute gap, that could be your entry point. Here in the notes, I've just said I'll wait for another opportunity to enter long. So I'm waiting for another return into a gap or an order block, etc. And the one thing that I always mention you must apply if you trade indices is to use a relative strength analysis. So here I'm just going to show you exactly how I do that, how quick it should take, and how easy it should be. It shouldn't be a hard process. It should be a very systematic, step-by-step process, and every time you do it, it should be the same process, and it should get quicker and quicker until you can just eyeball it and just tell immediately which one is strongest or weakest. So here on the S&P, I'm just showing price has made some lower highs. Here on the Dow, price has also made lower highs, and back on the Nasdaq, price has made equal highs. So obviously, without even using a fib or anything, we can tell that the Nasdaq is the strongest at this time. So if we're looking for a bullish RMR, we're going to be placing a long trade on the Nasdaq and not the S&P or the Dow. Over here, I'm just refining a very small 1-minute gap. This would be the potential entry for your long. This was a planned entry. As price reaches into that area, that's where you could place your long. So I'm just indicating now that this would be where I would place an entry. However, because of external circumstances like holding during the 9:30 equity open and holding during the 9:45 high impact news is something that I do not do. So this is just a purely hypothetical case study to see if the RMR is respected and to see if my understanding of price is correct on this day. So now I'm just showing that if I did decide to place an order there, you'd have to calculate your position size. So you measure your stop loss, put in your equity and your risk management or whatever percentage you're willing to risk, and in my calculator it'll spit out the position size that I should trade with. So before every single trade, this position size step and risk management step cannot be overlooked. So on the screen I've just measured the stop loss would be around 14 points, and if you had an equity of 123,000 with a risk percentage of 1.23%, if you're trading on 8cap, the broker specifically, then you can place a 10 position size. If you're on a different broker, the contract sizes may differ. For example, if you're on FTMO, it's times by 10. So on 8cap, if you can trade with 10 on Nasdaq, the equivalent on FTMO is 100. As I'm typing now, I'm just mentioning 9:30, 9:45. They are volatile moments, and it's less likely for trade ideas to pan out, especially during high impact news. So because of the danger and because of the risk, I'm deciding to sit on my hands, use this day as a study in price day, because I do not plan to hold during the 9:45 high impact news. So I've just placed the buy image and said it's a hypothetical trade, just to visually show you guys the trade. And the equity open at 9:30 is just about to tick, so you'll be able to see how price reacts at this time. It's quite volatile. And if you're planning to hold a trade during the equity open, you must have a limit order for your stop. You can't have a mental stop, since price can be very volatile. And if you're betting on your emotions and your reactions to get you out of a trade, one day you just have a high chance of being punished. So make sure to set limit orders for your stop as opposed to mental stop losses. Another thing I want to mention is when you place your stop loss, it is always at an area of invalidation. So if price reaches your stop loss, it just means your trade idea is wrong. So during retracements or during areas of drawdown, if they're not areas of invalidation, then there's absolutely no need to get out early. There are exceptions. For example, in drawdown, if there are multiple equal lows being painted short term, then that may be a sign to get out early. However, you can see right now price is in quite a bit of drawdown, but since it's not reached our stop loss yet, we are not inclined to get out early. We just have a plan and we want to execute that plan without inviting any emotional input. So price has now pumped quite healthily, and I'm just typing that buy side liquidity is still untouched. You can see where has price pumped to. It hasn't broken a swing high, so there's still much more liquidity above. So any sort of bearish retracement now would be just that, a retracement. It's not a reversal, it's just a retracement. Although you can imagine that during any of these bearish retracements, there's a lot of impulse retail shorters that think price is reversing. However, they have no idea where liquidity is resting, so why would price reverse now if it hasn't even taken buy-side liquidity? It's just not likely to. So here I've drawn a line where the closest area of buy-side liquidity is, so any retracement here is just a retracement. So at the start of the trade, you saw us apply relative strength, that the Nasdaq was currently the strongest. So if we traded the Nas, you can see we have quite a large bullish move, whereas over here on the Dow, you can see price has not been very bullish at all, and here on the S&P, price is much less bullish as well. In fact, if you took a long position at the exact same time, but on the S&P or the Dow, you would have been stopped. But because we use relative strength, we have a higher chance of a larger bullish move, and that 10-second step that you saw me do would have prevented us from being stopped out. So this moment in price is actually very interesting. I was very interested in this part. You can see price has just about reached that buy side area of liquidity. However, it is starting to reverse. As you can see, I'm writing that price has made an equal high, so there's even more reason to pump. So now price has gave an even bigger reason to entice shorters by creating an area of resistance. So right now, as price is retracing and having a deep retracement, this could also be an additional entry to pyramid. So any retracement over here, if it's not breaking our stop loss, our area of invalidation, then it is just a retracement, and it could be seen as an area to pyramid your position or an area to get in. And shortly after that deep retracement, price is pumping, and you can see that liquidity, buy-side liquidity has been taken. We saw the generation of equal highs. We saw the generation of buy-side liquidity, which made it even more likely to pump, and that's exactly what price did. So my final notes, I'm just saying that this hypothetical trade is now over, this case study is over, the objective was reached before 9:45. Had I known it would reach my objective before 9:45, that would mean I wouldn't have to hold during high impact news. However, reaching the objective before 9:45 is just something that I cannot or do not know, which is why I decided to accept the risk of high impact news and to use this day as more of a case study day. Alright guys, that'll be it for this video. If you enjoyed it or have any comments on how I can do better, leave them in the comments below. Don't forget to leave a like and subscribe if you enjoyed this video. It makes me very happy. But until next time, take care everyone. Peace.